What's up, everybody? It's Rob Chavez coming at you with another pro tip. And today in our team meeting, we brought in a great lender partner of ours who literally sat down and for a good 45 minutes showed us all the different loan options available to people out there right now. The market has really opened up when it comes to the different types of loans that the banks are now allowing. They're freeing it up a little bit, which could be a little scary, although the difference, one of the things we talked about, the difference between loan programs today versus how they were 10 years ago was that 10 years ago, they weren't even verifying income. It's like you would just tell them what you made, and as long as you had a pulse and a social security number and decent credit, they'd lend you whatever you said, based on whatever you said your income was, which is kind of crazy, right? Like, that's just crazy to me. But he was talking about things like somebody that just recently filed for bankruptcy or foreclosure. Can you believe it? You could actually, within 24 hours of that being discharged, buy a house. Now, of course, the credit score is going to be a little higher. There might be a point or two associated with it. So the cost of the loan is going to be more expensive, but it's possible to get a loan, which is kind of crazy, right? There's other programs for new construction where you actually can take the equity of your house and do a bridge loan to purchase the other house. You don't have to write the contract contingent on one home selling to purchase the next one. They'll grant you a bridge loan depending on the amount of equity that you have in there. Or perhaps the condo building that you want to purchase is not meeting the Fannie and Freddie Mae guidelines that are out there because there might be too many investors in the building, or maybe they don't have enough in reserves. So Fannie and Freddie will say, we're not going to lend on that building, but because you're dealing directly with a bank that has their own portfolio money, they'll look at those guidelines, they'll look at your creditworthiness, and they'll make a loan based on their portfolio that's there, their portfolio lending arm that's there. So just know, the whole point of this video is that maybe you've been thinking that you don't have enough for a down payment. Well, I'm going to tell you, you do, right? You potentially do. A lot of these loans are being done with, as little as 3%, 5%. If you're a veteran, heck, you can get in practically no money out of pocket, because you can get 100% financing, and you can get the sellers to actually give you credit on all the closing costs. So you could literally get in no money out of pocket. So there's lots of options available. And my suggestion is you go out and you talk to a great lender at one of the regional local banks, because they've got lots of programs. They can move quickly. They can bob and weave a lot faster than sometimes some of the bigger banks out there. Not always, but most of the time, right? I don't want to make blanket statements, because I'm sure there's some big banks out there that can bob and weave and go really, really fast as well. But for the most part, my experience has been that's not been the case. So, as always, if you have questions about any of this, call me, email me, text me, or comment below. And as always, make it a great day. Have an awesome day, and I'll talk to you soon. Take care.